Welcome back to another daily recap for Tuesday, December 10, 2024. It's about 8:17 a.m. currently. So one question I have going into today is, will the SPY be able to retrace a portion or all of the down move that they made yesterday? It's possible. They are trying to elevate price so far in the pre-market. If they push higher, I don't have levels between 603.83 and 606.55. Since that space between these levels is relatively large, other levels can be determined by using other methods, like Fibonacci price retracement lines and other things. I'm not including any levels in that area because there's just too much going on up there, moving averages, trend lines, and so forth. So I'd rather identify levels as needed in real time. If they're not finished with the downside, there are some levels of potential support below current price. These levels are designed for a normal market. I'll put that in air quotes. So what is not normal? Well, times of increased volatility because of news events or other things that make traders rush to dump their shares or start buying in bulk, increased institutional activity, in other words, things that can move the market significantly. So I'm just pointing this out to reiterate that there is no shame in ignoring a level if other things don't look right when price gets near a level. Whatever happens, we'll come back to this chart after the market closes and talk about any trades taken in the E-minis based off these levels here in the SPY. Catch you on the other side. It's after 8 p.m. now. Another down day and 2 levels hit. I'm still feeling under the weather, so I'll try to make this short. When price came down into 603.83 eventually, toward the end of the day, your operating level would have been 603.88. So that means if the SPY were to hit 603.88, you would have gone long with E-mini contracts the moment the SPY hit the level. However, they did something that I call a 2020 consolidation. This is when price gets down to around 20 cents of your level. This is the light blue line, 20 cents above the operating level. And they get there, they come up short of your level, and they kind of hang around that level for at least 20 minutes. They can get within 20 cents, but it's not like a near miss where they get within 10 cents and take off really quickly. This is sort of a consolidation. So essentially price is coming down, they're going sideways for a while, and generally what happens, this consolidation that they're creating will generally play in the direction that price has previously been going, meaning down in this case. When they stall out and find some support here, it's giving you a warning that if they do this for a while, when they get to your level, if they get to the level and hit it, you probably don't want to trust it for a long trade. So this is a no trade. This is because by the rules, you had a clue that they were probably going to go lower. It was a good call because you would have not been given a 4-point base hit, no bounce. You would have been in trouble down here. But the next trade at 602.95 plus 5 cents is 603. There's no reason not to take this trade on the long side. It was getting close to 330. That's my line in the sand, but it wasn't quite yet. It was 311 or so. But this level did not work. You're looking for a bounce in the E-minis of 4 points. That's about where that would be. And fumble threshold is 4 points below your entry. So there you go. So what do you do when it's getting near the end of the bell and you're out of the money? Well, I don't like holding positions overnight, at least futures positions. So if I'm in a trade like this and it's out of the money and I'm running out of time, I try to get out near or above my break even before it gets too close to 4 p.m., take whatever profit or just a wash. But the last resort is to close out the trade at 10 minutes before the closing bell, wherever it's at, and take whatever profit or loss you get from closing the position there. For today, that would have meant giving the market back 6 3/4 points on this trade, just getting out before things got too late. They did rally a little bit here, but it's not worth it. You don't know if they're going to jump up or go down farther, go down even lower. It is what it is. I'm just following a process. Every single level is treated the same way for the sake of our playing by the rules tracking log. Again, you probably know I don't enter trades within 30 minutes of the closing bell, and the majority of the time, I actually don't put money at risk after around noon or so. The morning is the best time to take advantage of these levels and the process in which to trade them. In the afternoon, some trades can be great, but the odds are generally decreased that levels will work as well once you get past 12 noon or so. In fact, I did take a trade today, and it was not at a level from the morning. I'll go ahead and play this. I mentioned in the first part of the video that I would probably be identifying levels of resistance higher up if price climbed a little bit. So my first trade was a short with 2 contracts right there. You see that? Very quick base hit of 4 points, kind of the equivalent of around 605.21. I saw it as an area of being good resistance for a while. And after I got that trade and they came back up and messed around with that level for a while, but they couldn't get above it, I just made the choice to step away, nurse my sore throat some more. So I was long gone by the time price got back down to the lower levels that we already looked at. Again, sometimes it's just easier to limit your trades to the morning. I find that it's worth missing the occasional home run in the afternoon that could happen when you're more likely to get consistent base hits in the morning. I got my 4 points within about 20 minutes of the opening bell, and I'll take $400 for a few minutes worth of work. Here's the daily chart. They came down through the gap that was left open. If they hit it yesterday the right way, probably would have provided more support, but they were kind of weak when they hit it today, so they fell through. If you start looking at other charts, maybe here's an hourly chart here, you're going to start to see that there's some areas in this general area around, if they come down to 600 or so, there's going to be some general support down here for a few reasons, and that could be the reset. Just don't forget, in the big picture, like here's a weekly chart, we're bullish. There's nothing bearish about this chart at all. They're just pulling back. Now they could go farther. We start seeing signals, I think maybe 30-minute chart and below. Not surprisingly, they're getting below some moving averages, but that has to happen on larger time frames before we take any stock in it. But anyway, just to point out on that hourly chart here, this, where I'm kind of hovering, 600, give or take, will be support if they get there soon. Of course, tomorrow I'll have more precise levels based on other variables, which should work for our relatively small scalp trades in the morning. Here are our 2 tracking logs. The first one, play in by the rules log. You can read the notes. I didn't make this color coded here. I'll do it right now. So this was not triggered because it was the consolidation. And then this level here, the level 2 here, that was the 6 3/4 point fumble. So there you go. Ended below water today. And then on my trades, it's just the level that was not on the board, roughly 605.21. I just got 4 points pretty quickly with 2 contracts. So that's a wrap for today. Thanks for watching. I hope you learned something. Tomorrow morning, as you know, we'll have new levels and a new game plan, and we'll do this all over again. There is a data release that I'll mention in the morning, which is important, and we'll see what the pre-market looks like leading up to that before I make any type of determinations about what that might do. In any case, we'll do this again tomorrow, and I'll talk to you in the next recap video. Have a great rest of your day.